Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, all the major real estate boards have released their July sales claims. And as you forecast, Calgary, Vancouver, Toronto all reported year-over-year sales increases. Can you give us more details?
Yeah, the details. You know, I guess the question is, how do we know a month or 2 months ahead of time? Are the sales going to be up or down in a month? I mean, how is it? What special sauce does Ross K. Realty Consultants have that allows us to forecast these year-over-year claims by the real estate boards a month or two in advance? Well, I'll tell your listeners, there is no special sauce. We simply understand how real estate sales get reported to a local real estate board, and when that reporting takes place, how long before it enters real estate stats. What I mean by that is that you have real estate boards releasing stats on the first day of a month. Well, you can't count sales on the first day of the month. You're at least have to be 5 business days into a new month before you know the total amount of sales that happened in the previous month. In some municipalities, you have to wait as long as 15 days because the MLS reporting rules allow a delay of up to 15 days. What we've seen taking place, Jim, over the last 2 years, and specifically over the last year, because the Canadian Real Estate Association got a change to the MLS, to the membership rules. What that change means is that realtors in British Columbia no longer have to be a member of the British Columbia Real Estate Board in order to be members of the Canadian Real Estate Association. In Ontario realtors no longer have to be members of the Ontario Real Estate Association. They can become members directly with the Canadian Real Estate Association. So this has put new pressure on these regional MLS associations to look like they have value. So they've all bumped up the reporting days. They're giving more assistance to the local real estate boards because they want to maintain their membership. In other words, they're trying to prove now that they're of value to the members, and especially in markets that are correcting. So when we see July sales being reported last week and this week, we know that we don't even measure July sales as of right now. We're still collecting the data. I know we'll report June sales. We can now officially give a firm number on our June sales, but you can't do it in July, at least for another 10 days from today. But all these real estate boards are reporting. Your listeners, if you're thinking of buying a house, I will promise you this. Sales year over year are not up 10% one month, down 10% the next month, and up 20% the following month. That is impossible. The reason why it's impossible is the vast majority of sales are going to take place today, or in the month of August, are already predetermined because the owners of the people who are going to buy houses have already sold their existing home, and they're now homeless. If they don't buy another home, they're homeless. So there's a certain number of sales that are going to take place in August and September because the owners of existing homes have already sold their house to somebody else. This is why you get closing dates at the end of June, in the end of July. And then like a larger percentage of sales close in those days because sales had to take place January, February, March, April, May, with a June 30th closing date. And all those sales take place. So we have a month of July here where, because the housing market is slowing down, is substantially slower in British Columbia, Ontario, and Alberta, where the length of time between when you sell your existing home and you purchase your next home has increased. And this period of time is cyclical. So we know when that period of time is going to be should be getting longer, and we know when it should be getting shorter. When we also then look in turn at monthly real estate stats, we can look for the pattern to be coming out in the real estate stats. And that's actually not the stats, Jim. It's the transactional data is where these numbers show up. And this pattern has been followed for decade after decade after decade. Yet it's another factor of the market that is misunderstood. So the reason why you had a surge in sales in July had nothing to do with the housing markets in Vancouver and Toronto getting 20% plus busier. The way that we measure the housing market, there was a small 1% change in the amount of sales that took place in British Columbia and Ontario in the month of June. We are forecasting a 1.1% increase in sales in those two locations for July. We will know early in September whether or not our July forecast was correct. Yet you have all these real estate boards making headlines in every single newspaper, every single cable television show, saying that sales in Toronto are up 20%, sales in Vancouver up 20%. You have thousands of realtors out there saying, oh yeah, this is true, this is true. Well, is it any wonder that the public, the consumer, would believe this? I mean, Jim, they actually said for Toronto today that the average selling price in Toronto has increased. The average selling price in July, year over year versus last July, is higher. Now, if 51 out of 100 homes sold for less money and 49 out of 100 homes sold for more money, I think the majority of homes sold for less money than they sold for the year before. And if that number gets even higher, say 60%. 60% sold for less money and 40% sold for more money. Why does it never get reported that the average home has sold for less money? This month in Toronto, the Toronto Real Estate Board, for the last 2 months, has falsely claimed the average home has increased in price, and it hasn't. The vast majority of home sellers this July in the provinces of British Columbia, Alberta, and Ontario are getting less money for their home than they would have received the previous year. Yet we hear sales prices will go up. Now, all of these things combined, the poor innocent home buyer is inundated with this nonsense every single month, hundreds if not thousands of times. Every reporter in Canada reports it to be true. And it's not true. Like, I don't know how to explain this any differently to the listeners, Jim. Real estate stats are not true housing market analytics. All they are sales tools designed to get you to buy a house and to get you to pay the highest price possible. That was the original reason those stats were created. What you're reading today in both the Toronto Real Estate Board, sales being up 20%. What you read in Vancouver, sales up 20%. What you read in Calgary, sales up 10%. It's all false. It's fake. It's phony. It's not real. But what I'll tell you is if everybody believes it to be real, like the tooth fairy, it will become real. And that's how you get a housing bubble. Housing bubbles happen for this reason. So the reason why we can forecast so accurately is because we know how the stats are generated, how the stats come into the MLS systems, how they get reported, how they get aggregated, and we know the built-in flaws in the system. We have studied these MLS systems for 3 decades. We know more than the Canadian Real Estate Association knows, their existing staff today, about those stats. We know more about the Real Estate Board of Greater Vancouver stats that the entire staff at the Real Estate Board of Greater Vancouver knows themselves. The reason we know is because we've studied them for 30 years. We have watched how they have changed over time. We know why the metrics were created. We knew the legal environment that the metrics were created under. We know the behavioral habits of the realtors because we have studied these things for 30 years. So, no, Jim, sales did not increase 20% plus in Toronto. No, sales did not increase 20% plus in Vancouver. No, sales did not increase 7-8%, whatever they claimed in Calgary. Those are false, misleading, misrepresentative, and if a licensed realtor quotes them without using a footnote, in other words, parentheses, as suggested by the Real Estate Board of whatever, they should be charged provincially for breaking local trading legislation. Our forecasts are very simple for us to make. Our forecasts are very simple for us to be correct. Even on pricing, we can be out maybe $1,000 or $2,000, but that's the only difference that we're going to be out. No, the numbers that you're reading in the paper today and last week are not true. They're fake. They're false. We can do nothing that an entire nation believes them to be true.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, one of our listeners asked, how can they know if the home they're buying is overpriced or underpriced in today's market?
Okay, so this actually leads to a little bit of a bigger explanation on how housing prices move. If you're buying a home, you're buying two assets. You're buying a piece of land, and you're buying the buildings that are on it. Now, the buildings that are on it are very easily, you can derive a price very easily for those. You basically have to say is, look, that building there, could I rebuild it for what they're asking me to pay for it? Okay? So if you're looking at a house that is 1,000 square feet and the local builders are building at $200 a square foot and that house is $200,000, you know that that's market value. If local builders are building at $160, then you've got to adjust to $160,000. If builders are building at $250 a square foot and the price goes up to $250, you should also make an adjustment for the amount of work that's going to be needed into that home to bring it up to 2019 standards. In other words, if it's got Formica countertops, no. It has to have granite. If the carpets are 8 years old, no. The carpets have to be brand new. If the roof is 12 years old, no. You've got to adjust for a brand new roof. Because the average home that is selling is always the top quality home. Very few buyers are foolish enough to go out and pick an inferior home that needs a lot more work than one that has already been upgraded, except for this one factor, the land. And the land is the thing that changes. We are seeing right now, because we monitor land prices, a decrease in what the asking price of raw land is. We're doing some calculations in even Vancouver. So for your listeners in Vancouver, there are building developments for sale in Vancouver where they're only looking for $45,000 per building envelope. Now, what's a building envelope? Well, if a lot is zoned for a single family home, that means there's one building envelope available on that lot. If that lot is 100 by 100 and you can only build one house on it, that means you have 100 by 100 foot lot where you can build one house, one building envelope for 100 by 100 foot lot. What's that? 10,000 square feet. If you look at a high rise, or even go back to the single detached. Let's say you've got this new the zoning in the city where they say, no, now you can build a laneway house on it. Okay, I've now created two building envelopes on the same piece of land. The land value itself is increased probably about 60% because the second home is not going to generally be the same quality as the existing home. But let's say that, for the sake of the argument, the house is a tear down, you're buying the raw land, but the city says now you can build a pair of semi-detached houses on that lot, identical homes. Well, you've effectively doubled the price of the land. We are seeing land values in Vancouver decline. The reason why a lot of your condominium projects are now being flagged or being suggested that they're not going to be completed is because the land value had been flipped so many times, raising the price that the last person who purchased the land, who is generally the final builder, paid, is too much now. They paid too much for those building envelopes. They're too expensive. They can't pay that price for a building envelope, then build a housing unit on it, and still sell it at market value. It's impossible right now in many cases. When your listeners will hear of the outrageous comments about per square footage of condominium. Okay, your listeners have heard this for the last 5 years. Your listeners will probably commonly remember condos are at $1,000 a square foot. Okay, folks, the condo isn't $1,000 a square foot, but the building envelope may now be 70% of the price of the condo. You still have the original price of the condo to build it, and the builder to make a reasonable profit off the cost of building, and then you have the land, and then you have whatever price that land is at. So when you're buying a house, this is how you have to think of things. Almost always you're going to be overpaying for a house. Almost always you're going to be paying too much money because the way the housing market works, the way that organized real estate works, the fact that the only way a real estate agent can make money is by a commission sales. You won't pay them directly for their services, so they got to upsell you. They got to convince you to buy. They got to do a selling job in you. You're always going to be paying, pretty much always, more than what the house is actually worth. Okay, what you need to understand is how much more are you paying. You're watching land values in Vancouver decrease. What that means is when the new assessments roll out for 2019, like for the 2020 taxes, but the July of 2019 assessments, land values are going to decrease. Okay? The actual value of the land through the assessment corporation will decrease. The house itself is not going to change at all. It'll change 2 or 3%. But the land can have a huge difference in what it's assessed at. And that's how people can get at least a basic idea of how much they're overpaying for any home that they buy. Is the price of the land that you're paying for the land sustainable? In other words, could a builder pay this price for the land and build an expensive enough home on it to be profitable? Most of the locations in Vancouver, that doesn't work any longer, which is why you've seen the 40, 50, 60% reduction in prices of the teardown, because the land is no longer worth what the builder can make a profit on it. In other words, build a house expensive enough to still generate a profit. It's not there. So land values are cratering in Vancouver. We're looking at some development opportunities where they're only at $40,000 per building envelope. We were shocked at a couple of these. Now, these aren't right in Vancouver, but they're in the surrounding municipality. Like, they're in the greater Vancouver area. And we're seeing these prices. When I'm saying we're looking at them because we're always studying the housing market. We have to know where the market is going to be 2 years from now. These land values are a leading indicator of where the prices are going to be. They were a leading indicator on the way up, and they're a leading indicator on the way down. Initially, they're trailing. So these things all work in cycles, though. They all follow a given pattern. So when you're out there looking, you're saying, is this house overpriced? The answer is quite simple. How much am I paying for the land, and how much am I paying for the building? Okay? I can pay market value for the building. As long as I'm paying what I could rebuild that house for, I'm okay. The land is a different story. And I think that's what your listeners can take from all of the conversations that we have, Jim. There is an old saying, you can't make any more land. And that saying is true. As the population grows, the value of land increases because man has to live somewhere. We have to have a place to house our family. If those building envelopes continue to shrink, we have some building envelopes in Vancouver and Toronto where the actual building envelope is only 1 square foot. The condo technically only occupies 1 square foot of ground because the building is so tall. And when you're paying these kind of prices, this is what you have to take into consideration. Because if you look at the history of the housing stock, how the housing stock has evolved over the last 50 years, you'll see that there's patterns in that housing stock that are reflected in today's prices. So when you're looking at a house and you're wondering, am I paying too much for it? You really need to get a breakdown of what you're paying for the land, which will be a serviced land. So we're not just saying the raw land. No. It needs to be the service. It's a serviced building lot for the sake of the argument, because we're talking urban here for Canada. And then you have to look at the price for the house. Add the two together, and then you know how much overpriced you're paying. You're always probably going to be paying over too much, but it's nice to know how much too much you're paying.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ross Kay. Ross, with mortgage rates dropping again, will this set off another wave of home buying in Canada?
Quick answer, I guess, Jim. The answer will be yes, but not in the way that everyone thinks it's going to be. So the very first signal that a housing market, the next cycle is starting again, is falling home prices. Okay, so what I mean to say is that as first-time buyers enter the market. In a larger share of the sales. In other words, more first-time buyers than previously were buying out of 100. Housing prices naturally decline. Now, I'm talking about average selling price here and median selling price here. I'm not talking about the artificial benchmark, which is basically measuring house price illusion, and the housing bubble. That's all the benchmark prices measure. The average price, though, is highly related to the sales mix, the buyer mix. And when the sales price is declining, then it means more first-time buyers are buying. When the sales price is rising, it means more trade-up buyers are buying. Just basic math. That's what's ahead with these mortgage rates. As you drop these mortgage rates, the mortgage qualification rate is marginal now. The amount of money you can borrow is going to change very little over the next 5 to 10 years. It's going to change very little unless government policy changes because the way that the rules are today. That said, people don't spend that kind of money anyways. And all the mortgage data that exists for the last 50 years proves this to be true. What you're looking at is a group of first-time buyers will enter the market. You're seeing that a little tiny bit in both Vancouver and in Toronto. These first-time buyers are buying lower-priced homes. Generally condominium. The owners of those condominiums now will go out and purchase a more expensive home, maybe a townhome, maybe a larger condominium, maybe a single detached home, depending on what part of the province that they're looking to move to. it will be a more expensive home. When they record their sales, the average price will go up. I think that just makes common sense. If you monitor the median and the average, and you know how the two interact in a housing market, you can know you have an exact knowledge of where the buyer mix is. So the lower rates are simply going to facilitate lower mortgage debt, lower mortgage interest payable by homeowners. When you're calculating whether or not you should enter a housing market, you need to look at how much does the house cost and how much am I going to spend. They are two different things. Most people never look at total mortgage interest assumed to be payable. You need to have that calculation when you make a decision to buy a home. You have to do the built-ins, ratcheting up of rates or declining of rates, depending on what part of the cycle we're in, the interest rate cycle we're in. And now we're going to, at some stage here, start to increase. But I also think we're going to be low for a very, very long period of time because we're in the interest rate trap, and I don't see how they're going to come out of it. I do not see how they're going to come out of this. They're going to have to come up with something, or they're going to let a long period of time pass. That's what my hope is. My hope is they let a long period of time pass. That said, what's happening today is the cost of ownership is decreasing because over the lifetime of you owning and paying your home, you're going to pay less mortgage interest. We are almost back to that November of 2016 low point. We can get mortgages today almost as low as they ever have been in history. We are probably going to see even a little bit lower than that. Those are buying opportunities because you're going to pay less interest. You need to do the math. You need to compare it against the price of the house that you're paying. You need to compare it against all of the ancillary costs, mortgage insurance, land transfer tax, property tax differential. You need to calculate all those things in. But the vast majority of Canadians, as in 99%, won't do that. They're going to listen to the realtor who's going to tell them, hey, sales are up 20% this month, July. The housing market's roaring again. You better buy now or you're going to miss out. And they'll believe them. And they'll make a few sales. But at these prices are not sustainable. The prices that we are at even today after the huge decreases been recorded in British Columbia and Ontario and Alberta, the prices are still not sustainable. So lower interest rates will cause some short illusion in the market, but over the long time, it will have no impact at all.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or for any other guests on our show, you can send them to info@housestreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.